A common and often confusing part of estate planning is taxes. Who pays and how much? To help make your life and your estate planning process a little easier, I'm going to walk you through the differences between a grantor trust and a non-grantor trust as it relates to taxes. A grantor trust refers to a trust that is taxed to the grantor, the person who created the trust, for either income tax purposes, estate tax purposes, or both. A non-grantor trust refers to a trust that is not taxed to the grantor for either income tax purposes, estate tax purposes, or both. Let's first look more closely at the grantor trust. When a grantor trust is created, you, as the grantor, retain certain powers over the trust that result in you continuing to pay personal income tax on the trust assets. Any taxable income or deduction earned by the trust will be taxed on the grantor's personal income tax return. And in most cases, the trust is not required to and will not file its own trust income tax return. Further, the grantor's assets can be transferred to the grantor trust without any recognition of gain. Any income tax paid by the grantor individually is not considered a gift to the trust of its tax liability. Now, a non-grantor trust, unlike a grantor trust, is taxed as its own separate entity with its own separate taxpayer identification number. The trustee will be responsible for filing the trust tax return and listing all the trust items of income and expenses. The grantor is not taxed on the income. If the income is not being accumulated within the trust and is instead being distributed to the beneficiaries, those beneficiaries would be responsible for the income tax. Further, because the trust and the grantor are separate tax-paying entities, transactions between the grantor and the trust are recognized for income tax purposes. As you consider which trust you want to establish, it's a good idea to take the income tax implications into consideration. Be aware of who pays the income tax on the trust income, the opportunities with grantor trust planning, and the income tax effect and distribution planning opportunities for non-grantor trusts. All that being said, taxes and navigating the best course of action with your trust can be confusing and overwhelming. You're not alone in that. We help people in these types of circumstances every day. To learn more about how trusts are taxed and other important estate planning issues, give our office a call, and one of our client welcome specialists will be happy to assist you.